Big news in the world of semiconductors as Google is potentially planning to sell billions of dollars of its tensor processing units, essentially a competitor to Nvidia, to Meta. And that is having both stocks soaring, and it's having shares of Nvidia go in the wrong direction. We'll discuss what this means for all of these companies, including Meta, including Nvidia, and including Google. Now, on last week's show, we said back the truck up on the stock that we kick things off with, and that is always Meta Platforms. Leave a comment down below if you backed up the truck. If you can tell, I'm particularly chipper and excited today. It's probably because I backed the truck up, and we started the week on Meta Platforms at $600, and we hit the drive button and the acceleration on Meta Platforms up nearly 8% in just a week, and we'll show it to you technically. When I show you the technical charts on these stocks, I am not telling you what I am seeing. I am telling you what the technical analysis is saying, and that was an area where Meta was going to reverse, and it did. Up big to nearly $650. This comes as the company is having big news in terms of its semiconductors. As most of you know, most of these companies are buying large amounts of Nvidia GPUs. In some cases, including the case of Meta, they're ordering large amounts of AMD GPUs, but they're unable to get their hands on as many as they want. And on top of that, Nvidia charges 75% gross margins for all of its products. So Nvidia coming under pressure this week as potentially Google is going to sell some of its AI chips, also known as tensor processing units. These have been inside of Google's data centers for over 10 years. This is a viable competitor to Nvidia. However, it takes a specific workload. It also takes specific technology stack that Meta potentially could have, because think about the business over at Google. It's essentially a recommendation engine at its core. It's recommending things like search results. It's recommending different types of ads. Well, that just lines up almost in parallel to exactly what Meta's business is. They recommend you posts, they recommend you ads, and they hope that you click and you buy. So the two companies are aligned from a technology and a product perspective. That likely means the TPU, which has been tailored specifically to Google's use cases, probably lines up very well with Meta's. Now, what makes this a little bit different for Meta is, yes, Google gives you access to these TPUs if you sign up for Google Cloud. If you want to spin up some type of service, or even if Meta wants access to these, they can go to Google's cloud and essentially lease access to that. My understanding is this deal is actually Meta is going to be housing these in their own data centers. These are going to be sold to Meta, very similar to how AMD and Nvidia GPUs are. That obviously means good things for anybody that is on the technology stack, because most of you understand that, yes, Google plays a large role in these TPUs, particularly on the software side, but they do need semiconductor companies to mask and tape out and do other technical aspects of actually manufacturing the chips. And obviously, this all gets sent to Taiwan Semiconductor, which books its business out years in advance. And so it takes a specific semiconductor company, particularly Broadcom in this case, to handle that aspect of it. So they are going to be a big winner here. Mizuho is assuming Lumentum, Micron, and many others I'll talk about here in a second. There's another big winner here, a stock that in the past I used to trash on, and then in January, I went mega bullish on. I went mega bullish again just a couple of weeks ago. Premium subscribers will know that all the information that is coming out about this company was known a couple of weeks ago. The market is finding out about it now, and shares of this company are soaring. We'll get to that story here in just a second, because we've got to start with Apple. It started the week at $275. This stock, like Google, has anti-gravity shoes. This thing just keeps going up and up and up. You're basically at 52-week highs at $280. You're up about 1.4% this week on the iPhone maker. Now, here's the big under-the-radar story, is Intel has been rumored for weeks to potentially be bringing in new customers for its foundry division. Now, this is on the advanced packaging side. I don't need to put you asleep on a Friday where you probably have shopping and a hangover from all your turkey dinner. Advanced packaging is not necessarily the entire foundry business, but it is a key component because, as most of you know, some of these chips are being made here in the United States, but then they actually get put on a plane or a boat or whatever, and they get shipped somewhere else for the actual packaging of the chip. Sometimes they go back to China. Well, Intel has an advanced packaging unit right here in the United States, and that's the part of foundry that they intend to scale first. They get customers for that and then maybe develop a relationship and do further manufacturing, maybe the complete chip from end to end. And Apple has been rumored over the past couple of weeks to potentially come in and do a deal with Intel. You will notice shares of Intel today alone up 10% over the past month, basically flat, but over the past 5 days, this week, up 20%. Now, not to toot our own horn, but over at Equity Empire, we sent out an alert to subscribers several weeks ago that these job postings and this rumor of Apple coming in and doing a deal with Intel, this was already in the works. And so savvy investors already knew this was coming, and it just goes to show you what you find out on Wall Street, like on a day today, you are ultimately late. This story was out there. And if you understood what was going on over at Intel, you understood how their advanced packaging business was starting to evolve, you could have made a ton of money. And you can probably tell I'm pretty excited today. Meta's pumping. And another big one that I doubled down on just in the past couple of weeks was actually Intel. And so while we have leftover turkey in the fridge, we might be going out for a steak dinner because things are popping for the stocks that we are recommending. Apple is facing potentially a $38 billion fine. We don't normally, like, these companies are threatened with a fine or levied with a fine every week. Oftentimes it's just a rounding error, so I don't report them. But when a $38 billion fine is hung on a company, even of Apple size, we've got to take notice. This is coming from India's High Court, and this is based on Apple App Store stuff with dating websites and other types of things. Now, they are judging this fine by worldwide sales. Apple is saying that's not necessarily fair. We'll see where this comes down. My guess is the attorneys over at Apple and maybe the executives, which have now a key manufacturing unit inside of India. I ordered my iPhone that just came in maybe a week or two ago, and I checked on the box. Where was this thing made? It happened to be made in India. And so obviously there's key ties with the company in there, with the country when it comes to manufacturing. And my guess is you get a little bit of greasing of the palms over in India, one of the more corrupt countries out there, and then maybe this $38 billion fine gets reduced. But it's a big headline number, and I think it's a headline number to get Apple to start paying up to the key figures in the country. Moving on to Amazon, big Black Friday day. Hopefully you have some shopping in you still left, as Amazon started the week at 224. This one up 3.8%, rebounding nicely from a very nice technical level. I'll show that to you here in a moment. At 233 on Amazon. This comes as the company announced big news in terms of their facilities. They have over 900 facilities globally amid their AI boom. There were other press releases talking about multi-billion-dollar stuff. One of the things that they're working on is continuing to reduce the cost over at Amazon when it comes to deliveries. And you have these delivery drones, which could be a key aspect of that. However, you had one snap a internet line in Texas. That's not a good look, as these drones tend to only be allowed to operate in a small geographical region, and very similar to robo-taxis, which we'll talk about here more in a moment when we get to Tesla, have a lot more testing to go. Now, as it relates to Broadcom, as it relates to custom silicon, as most of you know, Amazon also is trying to jam a bunch of custom silicon in their data centers. Outside of Google, Amazon is actually the farthest along because they've made an acquisition a couple of years ago. They're actually on their third generation of what they call this Trainium chip. They also kind of have an inference chip as well, which I believe is also on its second or third generation. However, Amazon has not selected the key critical partner to get these over the finish line. You might recall that Anthropic has a major deal with Amazon to run its model and train its models on large amounts of Trainium chips. In fact, Anthropic is really the only key customer, the flagship AI model out there, that is wanting to use Amazon's chips in large volumes. And you need to make these in large volumes to make them price competitive to something like an Nvidia. You can't make these in small batches. It just doesn't make sense, particularly to a company of the size of Amazon. And so Anthropic is a key partner, but also releasing these things on time is also very important because, as most of you know, Nvidia's got chips constantly in the hopper. You constantly have AMD releasing updates every single year. And so you have to hit your release window. And Trainium 3 missed or is going to miss a key release window. And it's largely because they continue to partner with Marvell. Now, you'll notice people ask me all the time about Marvell. And look, maybe the stock goes up, maybe it goes down, but it's not a winner long term. They constantly miss when it comes to these types of things. And so what is Amazon going to do? They're going to go to the Michael Jordan of the custom ASIC business, and that is Broadcom. Broadcom is weaseling its way to fix the issues with Trainium 3 that Marvell screwed up. And here's the other kicker. It goes back to the other stock that we talked about earlier, and that is Intel. Broadcom potentially partnering with Intel on some advanced packaging here as well. And so you have the big winners this week, both Broadcom and Intel. If you're just finding out about this stuff right now, if you're just putting the pieces together right now, don't worry. You're learning, you're figuring things out. The semiconductor space is pretty hard. But if you've been following this industry as closely as I have for nearly a decade, these pieces were put together weeks ago. You could be sitting on some actual pretty sizable gains at the current time. Moving on to Netflix. Start of the week at 104. This one drifting higher by about 3%, hitting off a key technical level as well. Finished the week at 107. Big week for Netflix as the final season of a very large hit show called Stranger Things hit the airwaves. I was trying to stream episodes of Selling Sunset, and boy, it was difficult. They were having trouble. They had a ton of people there. The US was on fire. Netflix trying to get as much cloud space as they possibly could devoted to Stranger Things, as you had many users reporting outages. That's probably good from a sense of the demand, but bad from a user perspective over at Netflix. We'll see how this carries on. This obviously was the last season, but you could probably do spin-offs of these types of things. We'll see what Netflix decides to do. They obviously have to constantly keep buffering up or beefing up its servers and its ability to deliver this type of content when you have these demand surges. But that's ultimately probably good with Amazon, which helps it out a lot there. Moving on to Nvidia. Big week for Nvidia as it started the week at 177. And at least according to my graph here, it was basically flat, but you had many ups and downs, including a dip down into the 170s. This all came as that report, which we talked about at the jump from Meta, is that you have Google potentially selling its AI chips. And this is not a cloud deal. This is Google actually physically selling these chips to Meta for Meta to likely write software and then house these either into a colocation or co-location data center that they're renting or inside one of their owned data centers. This would be a multi-billion-dollar deal. But one thing that Wall Street probably started to figure out a little bit later in the week. You had that initial drop on Nvidia seemed like a negative for them, but if you understood what was happening here, this was just news that was unfolding to the general public that was just finally starting to digest this and understand this. I actually tweeted this out many days ago. Before the news broke, Broadcom is in the custom pipeline with all of these companies, including with Google in 2026 and 2027. You have ByteDance later next year. Meta was already working with Broadcom, and my understanding of the situation is Meta was already working with Broadcom, and what they were finding is a lot of what they were working on was more or less overlapping with stuff that Google had been working on for the past 10 years. And so the two companies struck up a conversation, likely spearheaded by Broadcom, saying that, hey, you guys actually have a lot in common here. Maybe there's something else that could happen, where Meta was planning to come out with one of their first or second generations of these chips next year, but probably not in high enough volume for what the company needs at the current time. And so what this does is simply just accelerates Meta's custom ASIC design. It gets them a little bit further, or actually a lot further ahead than they would have later this year. But this is nothing new. Meta and a lot of these companies have been working on these custom ASICs, and this is a direction more and more of these companies, the top echelon companies, are going to go, including OpenAI in 2027, and Apple is allegedly working with Broadcom as well. That's to be announced. And then also XAI is certainly working with them, probably something coming at least late next year. And so all of this has been in the pipeline before. This is all great news for Broadcom. This, in my opinion, is great news for Meta, but I don't necessarily think it's inherently negative for Nvidia. There's a lot of companies and a lot of use cases that exist that can't use custom ASICs. Custom ASICs is for trillion-dollar companies or ones that have massive fundraising and backing, like maybe an XAI and an OpenAI. It's the top tier echelon company. There's going to be plenty of sovereign governments that will never use a custom ASIC. There's going to be custom designs done, but the market for non-custom merchant silicon, if you will, is going to stay large, and Nvidia is going to be at the top of the heap. Now, one thing that could really open up the door here is that you could have that China market open up with President Trump and his commerce secretary potentially allowing Nvidia to sell H200s. Now, some of you might say, isn't this the dumbed down chip that Nvidia has been allowed to sell into China, but China is blocking? No, these are actually Hopper chips, which have been in production for, I think, maybe 2 years or so. These are the chips where a lot of models are being inferenced and run on, and in some cases still trained on. This is the generation before the Blackwell. Now, just because Trump and Lutnick and Nvidia want to sell these into China, you have to have the Chinese government allow the companies or give the blessing, if you will, of the companies to buy these things. But here's what I'm also seeing is that Chinese tech firms, out of one corner of their mouth, as you'd expect them to say, is we're obeying the Chinese government. We're not going to buy these chips. That's exactly how I'd play it if I was a Chinese-based company. I wouldn't want to turn my back against the government. That would be a big, big mistake, and they all know that. However, nothing's stopping them from going abroad, tapping into some cloud deals, developing some shell corporations, and tapping into these Nvidia chips in another way. In my understanding, that's exactly what's happening. Moving on to the stock of the week. Stock of the year, potentially. Google was down and out earlier this year, but this thing has reversed, and it started the week at $2.99, and it just will not go down, powering all the way to a new fresh 52-week high, up over $320 on the search engine giant. This comes as the company is now approaching a $4 trillion market cap, and as we discussed at length today, potentially selling 500,000 chips could boost the earnings by 3%. Now, understand what Google has here. They have a tensor processing unit that, yes, does use some proprietary Broadcom technology that, yes, relies on Broadcom's relationship and lengthy relationship and allocation over at Taiwan Semi, but Google has developed extensive amount of software around this and a lot of its own intellectual property. So they'll realize some gross margin here. Broadcom will probably get maybe a small royalty off of these types of things, but the company is more or less willing to do that. Right now, the demand for these chips is really, really high, and given the cost of these are significantly lower, in some cases 20 to 30% lower than what you're seeing over at Nvidia, these things will sell like hotcakes. It just will come down. Can they make enough of them? And that's where Intel comes in. And that's why that stock was soaring this week as well. Mark Benioff, who hates Microsoft, finally had a holy S moment. And instead of logging into ChatGPT, he got on Gemini this past week and was like, wow, it's fantastic. I can't believe Mark Benioff didn't do this before. Look, Gemini is great. Grok is great. Anthropic is really good, depending on what you're trying to do. There are certain aspects of ChatGPT I can't live without. In fact, all of the little photos and thumbnails I do on all these videos, that all comes from, I think they're the best. Grok is great for facts because they have a fire hose of factual data being fed into it 24 hours a day. Anthropic is great for writing and creative writing. And I find that working with Anthropic, if you will, is almost identical to working with a very high-level employee, as weird as that sounds. ChatGPT, I'm sure, is there as well. Some of them have edges when it comes to coding. Some of them have edges and they're better at different types of use cases. I think if you're Mark Benioff, you should not be supporting a Microsoft competitor or essentially a Microsoft partly owned company, because both of those companies have been at war for a very long time. Now, speaking of Microsoft, start of the week at 473. This one reversed at an interesting technical level. I'll show it to you here in a moment. Up nearly 4% to finish the week at 492. OpenAI, it needs a boatload of money, guys, because you see the competition out there. And a lot of these other companies have key deals and key access point to chips. When you look at Anthropic, they have ownership in both Google and Amazon, being able to funnel cloud space into it. Now, OpenAI obviously have access to Microsoft, but that relationship has soured, and it certainly has been changed just over the past couple of months. This came as OpenAI turned to Oracle, who's doing a fantastic job when you look at the satellite imagery and the updated photos of the data center that they're building in Abilene, Texas. I can't believe how fast they're building this. So it's coming online quickly, but it's coming online at a massive price. OpenAI will need $207 billion in financing by 2030. Guys, that is just a couple of years away. And $207 billion. I know we're talking about these companies and we throw out these $200 billion, $100 billion, $1 trillion like it's nothing. But to OpenAI, $207 billion, I mean, this is what like Meta is doing like on an annualized revenue base. This is a massive amount of money, and obviously investors are starting to digest this. Are they going to be able to get this financing? It's a great company. The product is fantastic. They've innovated in ways we just haven't seen in technology. But my gosh, this is a massive commitment that this company is going to have to make. And at the same time, you have all this competition, particularly from Google, which is generating hundreds of billions of dollars in revenue. In fact, over $100 billion in a single quarter. It's going to be a tough fight for OpenAI. They're going to bring it to the mat, but it is not going to be easy. Moving on to Tesla. Start of the week at 409. This one up 5%. Nobody is buying a Tesla except for me. I bought one this last week. But other than me, the core business over at Tesla is under pressure, but investors are looking past that. This company comes to the table with an AI chip that it's been putting in its cars for a while. This is actual proprietary technology to Elon Musk and the Tesla brand. Obviously, Elon Musk going the route of Nvidia and AMD and other high-tech, cutting-edge semiconductor companies, saying that they're going to bring a new chip design to volume production every 12 months. Previously, I think this company was maybe on like a 2-year cadence. They're having to do this because when you start to look at the self-driving software that they're putting in the cars, if you have a new Tesla, what they call on hardware 4, you're able to run the latest software, which has some actual benefits. And I know this because I've had 2 different Teslas, one on the old hardware, one on the new hardware, and I got the new software on the new one. And I was like, yeah, this is actually a little bit better. There's some features, particularly as you end your ride pulling into the driveway. My Tesla the other day actually pulled into my driveway for the first time. Wasn't capable of doing that. My other one on the old hardware isn't actually capable of doing that. And so this company does have some competitive advantages when it comes to these chips. They've argued that these chips could be repurposed for other types of workloads, which obviously would put different types of revenue streams. That's always the case with Tesla. And some of you watching can't live with that. You can't stand that. That's okay. Tesla shouldn't be a big portion of your portfolio. But in terms of the Mag 7, high risk, high reward, it's at the top of the list. And having them work on these AI chips, which they already have a competitive advantage on, if they're able to leverage this into further domination and further markets, very similar to what we saw with Google this week, well, that would be interesting for shareholders. Company's planning to double its Austin robo-taxi fleet in December. I don't think this gets you to a significant number of cars. By the estimates that I've seen reported, they only have maybe 24 of these Model Ys that are essentially being deemed robo-taxis, but I do believe they have a safety driver. I think it's in the passenger seat in Austin, Texas. I think it's in the driver's seat out here in San Francisco, California. Tesla's methodically scaling this up. You can't pay attention to Elon Musk, who I think he said they were going to have thousands or millions of these things. Elon always throws out these obviously high targets that never come to fruition. But here's the deal, is when you look at full self-driving, you look at robo-taxis, there's a couple of players here, and obviously Tesla is one of them. And in a market this big, very similar to e-commerce, where you have, at least here in the United States, you have a couple of players. You have Amazon and Walmart and a couple of others, and Shopify as the platform service. That's e-commerce here in the United States. You look at cloud, you have Google, Amazon, and Microsoft. That's the cloud here in the United States. In a couple of years, when you look at robo-taxi or you look at cybercabs or whatever you want to call them, or autonomous vehicles, you're going to have Waymo, you're going to have Tesla, you're probably going to have Amazon as well, and maybe a couple of others. The market, as you can imagine, when we're talking about global transportation of both people and goods, that's a huge market. And if Tesla can carve out a small chunk of that, well, the $1.4 trillion market cap on a car maker might begin to make slightly more sense. This comes as the company's XAI. This is not Tesla. This is Elon Musk. They're going to close a $15 billion funding round. We've reported on this for many, many weeks now. Now, moving over to the technical segment. Very interesting for the S&P 500. We talked about how on last week's show, or for a couple of weeks here, we're talking about the micro trend with the S&P 500. We were on a breakneck upward trend really since the lows that you made in April and the recovery of that. Once you got kind of back a resumption of trend, you've been on this breakneck trend. And then finally you broke through. Now is very interesting. Breaking through here, creating a new lower low. This is very interesting technically. So you had the previous lows here. You made a new lower low. Now you're on watch. So once you break, you are on watch. Now, the S&P 500 did something that is very, very, very normal. You come back and you do a back test of trend. So you break trend, create a new lower low, but almost all the time, not almost all the time, but high probability. And this is what I see in charts all the time is you break trend, you come in and do a back test. And that's exactly what we did. Now it's decision day because as most of you can see, we have started to confirm a new lower low. But what did we also potentially confirm? A high, lower high, lower high. So what does this add up to? You have lower highs and lower lows. Is this potentially the start of that, which would be micro trend, downtrend? What that would look like is a rejection basically right where the shares are at with the S&P 500, and we would move lower. And if it was the start of a downtrend, we would make a new lower low off of the lows that we made just a couple of weeks ago. Does that materialize? Who knows? Hard to say, but it would make a lot of sense based on the evidence that we have. In fact, there's nothing in this technical pattern right now that would say this is not what's likely to happen. You have the 200-day moving average here, which is the squiggly blue line. It also converges down here towards a more middle or average kind of the uptrend. But what hasn't broke, and this is the key thing to understand, those of you that are long-term focused, not worried about kind of the intraday, kind of day-to-day stuff, you are still in a longer-term trend. This dates back several years, and obviously we're in a perpetual bull market that has lasted decades with obviously deviations, COVID, great financial crisis, tariffs. There's always these moments, inflation, that things that pull it down. Right now, I can't put my finger on what's the catalyst, whether it's the tariffs or the inflation or a great financial crisis or COVID. You could always put your finger on the thing that reverses you and takes you a big downtrend. There's nothing out there yet, but obviously those things can materialize, and those are the things that we're looking out for. Now, on last week's show, I do believe I used the term, this is where you back up the truck on Meta. And a lot of people think I get on the show every week and I'm talking technicals and I'm talking about what I am seeing. What I am seeing and what I am telling you as the technicals is what everybody else sees. So these aren't my technical analysis. This isn't my technical analysis. This is what the entire market is seeing. This is the chart that everybody looks at. And we pointed out that since the inflation and Mark Zuckerberg going metaverse, since those lows and the resumption of a very well-defined uptrend, we retested that area. This was last week. Shares were at 591. Now, I started buying Meta on this way down. And as it went down, my truck kept backing up and backing up and backing up. In fact, this is not advice that you should follow, but I am given a large amount of margin by the great Robinhood financial app. I rarely use it, rarely. But if you have proper risk management, there are moments where I think you can. And with the emphasis on proper risk management. With Meta, there was a moment last week where you could have backed the truck up with a stop loss just underneath that. Now, the stop loss could just cut you out of the margin, and that's what I did with Meta. I had about $25,000 of my own money in this one, and then I put another about 25 of what Robinhood gave me. I had a stop loss just underneath that to cut me out of Robinhood stake just in case trend broke. If trend broke here with Meta, it's over, it's done. Who knows where you're going to go, but you're probably going to retest 480. I thought that was unlikely, and so I was willing to risk it, and we rebounded big time this week. Now, I haven't sold any of that position of margin Robinhood stake. I have continued to move my stop loss up on that just to reduce my risk there, and this is what people do. Now, guys won't tell you this on X. They'll YOLO things, and you can do whatever you want with your account. But when you work really hard for your money, you got a family, and you've been doing this for a long time, that is how you want to do this from a risk management perspective. Because I have been wrong a lot of times in my life, and if I'm wrong, it's okay. You lose a little bit of money, but you don't want to lose it all. You don't want to blow up your entire account. That's how I've been playing Meta. This one looking fantastic, although you are likely to reach overhead resistance up here in the 670s. However, if you were able to churn through that, you've got a very large gap in this chart that'll take you back up to 700, potentially all the way up to 750. And that is what I saw. You could buy this one at 600, actually under that. My cost basis is actually really, really low because I really backed it up as it kept moving lower. But I think you can go from about 590 on this one, just resumption of trend, back into the 740s. This company reports earnings in 68 days. Do you really want to be short this one? Do you really not want to be long this stock as it heads into a quarter where there's a lot of ad buying? Moving on to Apple, looking great technically. There is an area of support down here. If you're like me and our Equity Empire subscribers, we piled in this one at the bottom of the channel, and this is what I do. This is what I do for subscribers. We identify when we're at the bottom of the channels. We give you a range with a stop loss underneath. Sometimes, look, we get stopped out. You're down 7-8%, no big deal. But what you're trying to do is catch these ones that go on a run. Apple did that. You're looking to exit up here. We'll likely do that, I would guess, in the next couple of weeks. Amazon looking fantastic technically. This is beautiful technicals. You have confirmed a new higher high. Yes, you've pulled off of those highs, but no big deal. You pulled all the way down to a 200-day moving average. You went from 257 all the way down to 220. The amateurs would panic, but actually this was your moment to add a little bit more. You've bounced off this level. Again, you've confirmed a new higher high. Things go well with Amazon and the market. You should test a new higher high at some point, probably next year, maybe later this year, but be conservative. Later next year, up back into the upper 260s. Netflix, it's decision day for Netflix. This looks like the S&P 500, right? The S&P 500, top of the channel, broke, was not able to make a new higher high, and this is what the S&P 500 could look like in a couple of weeks. And ironically about that, what I've noticed about Netflix is it's often first out of trend, but it's also first in a new trend. And that's what I'm seeing with Netflix. This was the first to break down of these stocks, and that's where it's at. You have not been able to recover. You would not want to get below these new current lows. I mean, you've made over the past couple of months low, lower low, lower low, confirmed by lower high, lower high. This is a downtrend. What you're looking for with Netflix is a push back into the 200-day moving average. That's 110. That's going to be hard to get above, but you're definitely going to want to get back into the 116s, 120s, suck back into here. It seems unlikely at this point. You've put up, in my opinion, too much price action below the trend here. It's not impossible, but this is not looking good. In that case, you want some area of protection under here. If this downtrend materializes, you can pull up charts of Adobe, Enphase Energy, Lululemon. When the uptrend breaks, you really have no idea how low it can go. Now, I understand Netflix is in a good position, but it has limited levers that it can pull financially. And so if this one can't magically get back onto trend, that's not looking great technically. Nvidia looks just fine technically. I know everybody was panicking this week, but you've confirmed a new higher high on this one. Yes, in the short term, you did just confirm a new lower low. The previous lows were here. And again, we're talking about micro trends here. It was at 180. It's here. But what you can do, you want to stretch things out. Look, here's a weekly view. it still looks fine technically. In fact, you've been on this breakneck trend. There's a huge area of support here in the 160s, 170s. A break lower than that even really isn't that overly concerning because you have a huge amount of consolidation for the shares underneath that. You are converging onto a 200-day moving average right down here at 160. If you don't have a position on Nvidia or you want to buy the dip, that's probably the area where I would step in. Google has just gone parabolic. I saw Kathy Wood pile into that one. That seems very typical of her and her research team. They like to pile in things at the top. This is probably eventually a topping pattern with Google. That's nothing negative about the company. I have Google shares. It is like 10% of one of my portfolios. I have a large amount of money in Google. I'm not going to be selling shares of Google, but you have to be realistic when you look at these things technically. This is way overextended. Pullbacks back to 270 and obviously deeper than that can be purchased. Microsoft looking fantastic technically. Yet a moment this week. We almost sent this one out as an alert, but this isn't the cleanest view of this. You have support down here at 466. It did bounce off that, but I'm not convinced. This one doesn't want to hang out in this area. It did create kind of a double top on this one. It's painting a couple of different pictures, but if you like Microsoft, you want to add to it, it's not the worst spot. Tesla is starting a new consolidation area. It is just found footing here. It's converging in the middle of the channel, 200-day moving average. You'd like to see this one at some point. Doesn't have to be anytime soon. Get back above the 520, 530 level. That would confirm a new higher high. This is almost good enough for me, but technically you would like to get above there. This one's looking fine. It's not necessarily in a buying range for me, unless you're super bullish about what they've got going on. You don't got earnings for this one for 61 days. And so the market is going to have to kind of float where you're not going to have a lot of maybe even macro news. The Feds kind of telegraph what they're going to do. But as you move early into next year, you're going to have earnings from all of these companies right in that month of January, tail end of January, into February. And at the same time, you're going to have new Fed chairman. Essentially, Donald Trump Jr. is going to become the Fed chairman. That's obviously a joke, but obviously President Trump is going to put a guy in charge that is his guy. Now, he's made mistakes there in the past, so we'll see if he makes a mistake this time. But my guess is he won't. He'll put a very, very dovish guy in or girl in the head of the Fed, and that could be a tailwind to push this thing even higher. We'll obviously be here to discuss it here on the FAANG Stock Recap Show, but that wraps it up for this week. That's Friday, February 28th. If you're paying very close attention to what's happening in these markets, you would have known Intel was working with Apple weeks ago. But what's crazy is people think this stuff is known by the market, but it actually wasn't. Intel was up 10% this week. Equity Empire subscribers was alerted to this a couple of weeks ago. Same thing with Broadcom. The market woke up to the fact that Google has been working on these TPUs for over a decade. But I first recommended Broadcom years ago to MarketWise subscribers when it was like $80. And this is one we've constantly recommended on a buy the dip. If you're paying so close attention to the market, these moves are easy. If you don't have time to pay attention to this stuff, if you don't have time to devote hours and hours and hours to it like I do and pay thousands of dollars for sources, I pay almost $10,000 a month in subscriptions and paywalls and relationships and interviews and things that are behind the scenes that help me make a lot of money. And then we turn around and give a lot of that or all of that information and insight to subscribers. There's always links down below. If you can't afford it, no big deal, because a lot of people have, and we really, really appreciate it. The FAANG Stock Recap Show is commercial free because of all of those subscribers that continue to support us, and we will have a price increase. I'm going to put that off until we get into 2026, but the price is not going to go up. We're not going to do coupon codes. We're not going to lower the price. In fact, we've had so much interest and so much demand that we're going to continue to move the price higher. A lot of people starting out their career, they have to put things on sale. They have to give you a discount. They have to do low ticket items. At this point in my career, we don't have to do that. And we want to target those serious investors with serious money that want to take their investments to the next level. Folks, that was the FAANG Stock Recap Show. I hope you all had a wonderful Thanksgiving. I hope you're having a great Black Friday during this holiday season. I want to just say how much I appreciate all of you. I can't wait to come back every single Friday, and it's because of so many people that comment, so many people that watch, so many people that show their appreciation, even if your appreciation is a little bit of trolling and smack talk in the chat. If you backed up the truck in Meta, I want to know. We'll see you again soon. Good luck with your investments.